Hi, I'm Verity. I also went to LSC. The aim of this video is to equip you with some tax advice as you head out into the world as a self-employed person. So, first things first, how to register as self-employed. This is really straightforward. There's a link alongside this video. If you can't do that, type it into Google, how to register as self-employed with HMRC. There's an online form, you fill it out, and once you've done that, HMRC will write to you. They'll send you a letter in the post with your 10-digit unique taxpayer reference. That is your UTR number. Keep that safe. Either put it in the notes section of your phone or email it to yourself. Keep that because you'll be asked for it when you do work for anyone as a self-employed person. Your agent will want that as well. Additionally, HMRC will send you a letter with an activation code so that you can get into your online portal. That is where you file your tax return online. You only need the code the first time you enter. After that, you can just use the passwords to get in and out of that portal. Try not to lose the passwords. If you do, you'll need another code, and it takes about 10 days in the post, which is a little bit boring and stressful if you're a few days away from the deadline. So that is you registered as self-employed with your 10-digit UTR number. What is a self-assessment tax return? Quite simply, it's the process where you let HMRC know your income, your gains and your relevant expenses. And that covers a 12-month period. It's the same tax year every year. It runs from the 6th of April round to the 5th of April. You can adjust those if you want to, make it from the 1st of April to the 31st of March. HMRC will always ask you when your records are made up to, when you do the tax return. Up to you. The deadline is 10 months later, so you've got to the 31st of January to file your tax return, which seems like a long time, 10 months, but time flies when you're having fun and thinking of other things. So my advice at this point is if you can do your tax return earlier than January, do. It will give you an idea as well what you owe. So you'll know in June what you've got to pay on the 31st of January, and it gives you time to get that money together rather than filing it 31st of January and forking out at the same time. So if you're filing your tax return yourself, you'll be asked quite a lot of questions before you actually get to the numbers part. One of these questions asks if you are filing it on a cash basis. The answer is yes, you are. That's how most sole traders work. The only time you wouldn't be is if you're running a business or dealing with lots of money, and that would be more traditional accounting. So the answer is yes, you are filing on a cash basis. Your income. HMRC want you to keep records. Although you're only presenting them with the figures, the final figures at the end, it's up to you to keep a detailed record. As an aside note, it is a legal obligation to keep these records for 5 years. They've got to date back 5 years. Don't burn them all. Don't burn them all just yet. The record keeping for your income as self-employed, that can be really simple. You can get to the end of the year and you can add up everything that you've earned. That's it. You just need a sum figure. Really basic old school ways to keep a spreadsheet. Date, company, income, if you remember how to use Excel, a sum at the bottom to add it all up. Do keep your records of your self-employed income separate to your PAYE income. You might be wondering why I'm telling you that, because you're a self-employed person. However, there will be some jobs that you might do where they employ you on a PAYE basis. So a lot of promo jobs, if you're working in a bar perhaps, they're going to take tax at source. What's important to remember is although you're keeping the income total separate, you do have to report both. So don't just tell them HMRC about your self-employed income, you need to tell them about that and the PAYE stuff. I'll come back to that. In the meantime, your self-employed income, your bank statements are a record, that's proof of what you've earned, but like I say, it's a good idea to keep a record either in an app or, like I said, a really straightforward spreadsheet so you can keep track of everything that you have earned that year. So, the PAYE jobs that you do, keep every payslip they send you. That goes for anything actually, so when you're touring, when you're in theatre, they will give you a payslip every week. That's not just to tell you what you've earned, it's for you to keep, it's part of your essential record keeping. So PAYE, they should as well send you either a P45 or a P60 in April, that's the end of the tax year, and that just tells you everything that you've earned with them that year. So you'll get one of those from each of your PAYE employers. So if you've done 5 different jobs for 5 different PAYE companies, you have to fill out 5 different forms, different sections for each of those. It's a pain, but that's what you have to do. You will also get from them a tax code, a PAYE code. If you don't know what it is, just phone them and ask, and they should tell you. Expenses. So this is the part where obviously you've got your gross income, which is everything you've earned, and your expenses you can deduct. Your expenses, the technical wording, is expenses incurred wholly and exclusively for the purposes of the trade. Wholly and exclusively. So that's how you've got to justify everything you're spending. How it works, just to avoid confusion, say I've earned £30,000 in the year and I spent £5,000 on things that were wholly and exclusively for the purposes of my trade. What it means, it doesn't mean that I get £5,000 off my tax bill. It's not a direct deduction. What it means is HMRC regard my income as £25,000 and then they'll tax me on that amount. So, what can you claim? Office expenses are agents' fees. They account for a really huge portion of your income, / non-income. Accountants, so if you are using an accountant to do your taxes, the fees you pay to them are deductible. Office things like scripts, books, sheet music that you've got to download, dance clothing, things like lessons and classes. Just as a note, actually, if you are already self-employed, when it comes to professional courses, so your 3 years here at LSC, you can't claim that. What you can claim are the classes that you participate in once you're actually on the job, once you're out there in the trade. So other expenses include equity, if you're paying your equity membership, headshot, show reels, spotlight fees every year. They are all expenses that you have to incur to do your job. So the grey area expenses where you're buying something and it's not solely for business, it's something that you would use yourself. A really good example is makeup. If you're buying foundations and mascaras that you're using to put on for a show, but also you use in life, 50-50. You just claim for 50% of that. It's obviously different if you're doing something like cats. They would probably just give you the makeup. It won't usually be an expense that you have to incur. But if you did have to replace that and it was makeup you were putting on that you would not wear in the street, that is fully a business expense. You'd claim for the whole amount of that. Other expenses where you would do a percentage include things such as your phone. That is where you do business from. So you're getting emails, you're communicating with your agent there, pretty much everything actually you can do on your phone. And so I would realistically say that's probably more than 50% of your business is done on your phone. Make sure you can justify it, but I think justifiably, I'd say 60%, maybe 80%, but be careful and make sure you can justify it. Your house as well, so where you live, your working space is it's where you're rehearsing your scripts, you're practicing your songs, maybe you're doing your bookkeeping there, so that is your home office essentially. If there's a way to work this out, so if you did pay for the whole house, if you had a mortgage perhaps for the whole house, you would work out the total amount of the mortgage and all the bills all together, what are the outgoings, maybe let's say it's £1,200 a month. You divide that by the number of rooms there are in the house, not including the kitchen and the bathroom, because apparently they're not working spaces. And then say one of those was your office, that's obviously the amount that you would claim. So say you divided it by, there were 6 rooms in your house, so that's £200 that you would claim for your office space. However, I realise most people watching this, you're probably, or likely to be renting, and you might be sharing with other people, and you're just paying for your room in that house. So be realistic, how much of your time are you spending working in there? Maybe it's 25% of your time. Again, be careful, because if you're going out to a day job and you're claiming PAYE for, you've been doing that job for months, every day of the month, it's clear that you haven't got a lot of hours left to be working in your bedroom. So make sure when you're making these claims that it is justifiable. So that's the percentage ones. There's a couple of expenses that are really questionable and people always get a bit confused about and often want to speak to a tax advisor about, which again is great, that's a really good idea, seek advice if you're not sure. A couple of these, just as a general, clothing. People are like, can I claim my clothing? Because I need it to look good, I need it for my audition. HMRC are getting a bit tight on that one. You have to be able to justify that it was just for the audition. If it's something that you're going to wear outside the audition as well, you could claim for a small percentage of that, but it really would be a very small percentage when you think about how many auditions you're doing and how much of the rest of your life you're spending in those clothes. Another one is the gym. Again, they've said if you can really justify it, you've got a physically demanding job. I mean, equity have said if you're a circus performer, you can claim the gym. I think it's justifiable if you are a dancer, if you are in a physical show, and that's what you need to upkeep that. And especially, I know for some shows you need to look a certain way. I've worked with guys that have to look really big, and they need the weights in the gym, so that is very much a justifiable expense. If you're not sure and you think actually maybe it is pushing it a bit, you could claim for a small portion of that, because don't forget it's a health benefit to you as well. Travel is another one. If you are travelling back and forth every day somewhere and it's a self-employed job, that's a little bit harder to claim your travel every day. You could claim a portion of that, but usually if you want to claim the whole amount, you'd only do that if it's auditions or if it's travel to rehearsals, because again, you're not there for the whole year. You're not there the whole year. So touring, when you get your tour contract through, you'll be told what your weekly wage is, and you'll be told that you're getting a weekly amount for subsistence and some travel money as well. Currently the subsistence amount hovers around £230 or £240 a week, and travel depends on where you're going. Your company manager works that out a few weeks in advance. HMRC, although it's called subsistence even on your pay slips and it's clearly not intended as income, HMRC regard it as that. It's money that's come to you. So you have to declare that in your gross earnings. You have to declare that. But you can take it all off. As long as you can justify it, as long as you've got receipts that back it up, and a receipt that says I spent £200 on digs this week and then an extra £40 on this, that and the other, you've got the receipts to prove it. A lot of people find they spend the subsistence and more. You can actually make a profit on it, just as an aside note. You can spend less, but if you are claiming all of it, you need to have the receipts to back that up. Cruise ships. A lot of people ask, do I have to pay tax if I'm earning money in the middle of the ocean? The answer is, if you are a registered UK taxpayer and you've gone on board as a self-employed person, yes, you do. Like any income you've made, you have to declare it in your tax return. There are exceptions, so if you're working for a couple of UK companies, they will take tax at source. And again, you might have some exceptions where you're working for perhaps an American company that want to take American tax. If in doubt, when it comes to these things, always just ask advice. You can get in touch with Equities tax advisor, or you can work with an accountant who will help you out with that. There are some exceptions. So for instance, a few years ago, it was a case where if you spent a certain number of nights away at sea, away from your UK residency, you wouldn't have to pay tax. Tax laws change, however, so that was the case then. As always, seek advice. Foreign tax. So this is if you're working abroad. I've worked in Canada, and because it was a Canadian company that were paying me, I had to pay Canadian tax. What it means though is when I declare it in the UK, I let them know that I've already paid tax to Canada, so I don't have to pay tax again. It's a separate form that you fill out, or a separate section, because you're doing it online. Again, it's really helpful if you're a little bit stuck. Get an accountant to help you, but you can do it on your own. You just need to be really clear on what you've paid already. As always, keep the records, keep the pay slips that you've got from them, so that you can fill it out properly and don't pay double tax. So one thing to remember is you pay your tax twice a year. So the 31st of January is the big one. That's when you've completed your return by then, and you actually have to pay the first amount. Now this isn't just the amount of tax for what you've earned. They charge you on account for next year. So HMRC assume that you're going to earn the same again, they charge you an extra bit of money for the next year. And they do that again in July. So there's extra money paid on top of your January tax bill and in July. And that keeps going until you stop paying tax or you die. Something. There's no let up from that. That just carries on and carries on. So you can, if you think that you're going to earn less next year, because actually realistically by January you've already been working for 10 months, so you've got an idea about how much you've earned. And if you think, it's going to be a lot less, you can reduce the payment on account. It's quite simple to do. You just request to reduce it. And actually, from my memory, you just enter the figure that you think it should be. Kind of risky. Don't go gung-ho here and just put in £100, because if it turns out that actually perhaps you earn more, you will owe HMRC money. And if you owe HMRC money, they charge interest on it. Important to remember, but it works the other way. So if you have paid too much on account, they will give you the money back plus the interest. And I've recently heard that's better than the interest rate at the banks at the moment. Not advising you overpay just to make some interest, but that's an important one to note. You won't lose out. You just won't have it in your bank. A couple of things to remember, some really helpful things. Save money for tax. Oh, it sounds so boring and I sound probably like a real mum here, but put away your money as you earn it. It's devastating to get to the 31st of January and suddenly finding you have to conjure up thousands of pounds to give away to HMRC. As devastating as it feels to put away 20 to 25% of your income as it's paid to you, it's not as harsh as forking out in January, all in one go, all of a sudden. So save the money away. Another tip, and this again, it sounds probably like your mum addressing you. I know you're not 70, you're not susceptible to scams, but they're really good. There's some really good scams out there where you think HMRC have texted you and you really want to leap at the chance because they'll message you and say you're owed a rebate. What are your bank details? What is your mother's maiden name, etc. It's so easy to fall for because you think, oh good, yes, it looks official and I am owed money, so I'll follow this. Don't fall for it. If HMRC owe you money, they actually don't get in touch, they just put it back in your bank account. They don't even tell you, it's just like a surprise birthday. So do not fall for scams. HMRC will write to you in the post if it's anything really important. Invoicing. So if you are working as a self-employed person and say you're doing a teaching job or anything else that requires you to send an invoice, key things to include are your name, your address, your national insurance number and your UTR number. Most importantly, your bank details, so they know where to pay it to. Also date the invoice, date the actual day of the work that you did and just a short description of the work that you carried out. It's worth noting at the bottom as well, please make payment within 30 days. You can make a statement that you'll be charging interest if it went beyond that, but it's always worth putting as a polite note at the bottom. Very, very quick thing to mention is your student loan. If you have a student loan, let your accountant know, or if you're filing your return yourself, tick the box that says you have a student loan. It's as simple as that. You don't have to do any calculations. HMRC, with the student loans company, work out what you need to pay back, and that is based on your income. So it won't be catastrophic for you. It will be, relevant and in proportion to what you've earned. But do be aware of that, because again, that's another small amount of money that is going to be required of you.